All right, welcome. Okay, so I hope you subscribe and I hope you recommend this channel to your friends because of the helpful things you've actually been enjoying. Okay, and if you're new, okay, it has been the normal custom. Okay, I'm going to give the indicator I'm going to be sharing today free, and you're going to apply it the way I ask you to apply and you enjoy it. Now, the only thing I need you to do is to like the video, now comment if possible, subscribe to the channel, and send a screenshot that you subscribe and you've liked the video to me on Telegram. Okay, the Telegram link to personal message me on Telegram will be there. And also, if you want to join my Telegram group, also the link also will be there where I share useful information, helpful information, and give trade calls, that signals free of charge. Don't charge anybody there. Okay, feel free to join. Okay, now this indicator I'm going to give us today is going to be focusing on boom and crash. Okay, many of us will be trading boom and crash, and we feel like just one thing you have to use 1 minute, 5 minutes for. As much as those things are very true, you trade with it with lower time frame, but you agree with me that to make good money with boom and crash, you have to go long. As in, you have to trade confidently. That is, you should cover a longer distance to deliver good profit for you. Have a rest of mind that if you're trading against spike, anti-spike, that even if spike occurs in the middle of your trade, you will still end up doing profitably without blowing up your account. And also, if you're trading a spike, you should also know that as much as the market actually is in agreement with what you have, it's going to eventually play out as you wish it to play out. So by this, it helps you not to actually lose account. You don't blow up account as a normal custom of people that you blow account easily using trading boom and crash. Okay, so you don't blow account easily with it. So this strategy, I will be using it on different time frame. Here in the video, I'll be showing us how to use it on different time frame, both 5 minutes, 1 minute, 15 minutes. I'm going to show us, okay, and also I'm going to show us how to use it. Okay, that's just the time frame. Both lower time frame and higher time frame. I'm going to show us how to use it. Okay, now the indicator I've explained in the previous video, and if you don't understand, if you've not watched the previous video, what I said there was how to actually install it. How you can install the indicator that I will be sending to you on Telegram. So if you don't know how to install it, was how useful it is to you. Now if you look up here, you should have something like this, the F sign. If you don't have the F sign here on your chart, you can actually bring it up into the place. You just go to around this place, whether you see the Hago trading, you see the photo or any other thing around this side, you just right click. When you right click, it shows this for you. Then you go to custom, then you locate it. It's supposed to be here. Now if it is here, you have to double click it from here so that it can reflect here. Once it reflects here, it will reflect on your screen. If you don't have it and you think, because the indicator will be saved there automatically, so you can quickly go there and pick it up from there. But does not also mean that if that doesn't work, you cannot still get it. You can still get it in another way. Another way you can get it is through your navigation. Now maybe you also your chart is like mine, but many of the charts can never be mine. By the left hand side, you're going to have your account information and everything. All that thing is also here. This is it on my own side here. I just brought it to this side. Now this the navigation, the navigator area. You're going to bring it. If you don't have it normally, it's easy to just bring up. Come to view, you see navigation. Click on navigation. Once you click on it, it will show automatically. Then when it show automatically, from under the navigation, you just scroll down, you will find the indicator there and you'll be able to use it. All right, the indicator name is daily pivot shift. Okay, the daily pivot shift, you're going to drag it and drop on your chart and you're going to click OK. Now this is actually helpful for both spike and anti-spike. Now this is 15 minutes. Now this is the account. Okay, you can see that the market is 4-minute sell trend, but I can take a risk of buying. Now why will I be taking the risk of buying? Now the market have actually moved. I'm only just showing us something. I'm just trying to explain. Now the market can actually, as I'm explaining to you now, the market can come to 46 first, then the market should pull back to this line. You can see this yellow line, that's around where the market is currently. Remember I said I'm just using this to explain to us. So now you see there are some lines that are strong, you have some lines that are not very strong. Those lines that are very strong, that are deep lines, the purple, the red, the green, they are not there for fancy sake. They are there to tell you where the market have a higher tendency of either reversal or continuation, where you expect the market, if you're trading for spike, once the market gets to around that area, you're expecting market to spike. Okay, if you're trading for anti-spike, once the market hits spike to that area and the market is now pulling up and did not spike beyond it, the market also have higher tendency to actually, continue in your direction as you expected, that anti-spike. Now I'm just showing us like this. Now I supposed to be closing already. Now, not because I'm just afraid I want to rush out of the market, but because according to what I just explained now, see the strong green candle, the market is almost already there. It's already there. It's not even about almost there. Now it means that if I've entered the moment the market spikes to this area and I enjoy up to this area, even this spike will not catch me in the market. I would have been out before the market eventually spike on 15 minutes. Now, meaning that by now I should be exiting the market. So if you're trading with 1.0, you're making already more than $1, about $2 already. With the time I'm making an entry, actually, meaning if you're trading 0.2, you can make up to $1 without stress with it. And then once the market, you can see now something actually happened. Now once these 15 minutes finish, you can see that the strong line that we have there before was taken out, now telling you that there is tendency for a pool of market to continue to the next key level, which is this yellow. Now remember, you're not trying to make entries and actually hold on without following a guide. You have your guide. You enter when that thing forms so that you can exit when you get to this place. Now if you get to this one also, you enter. Okay, it's also the same place. Okay, sorry, so it's the same thing. Market is not even showing a deeper that is going lower, is the same thing. You can see the market has gotten to this point, which is expected for the market to get to, even if the market is going to return and sell, is where it's expected the market to actually get to then before it sell. The same way when the market is for sell, okay, like for example now you can see here, let me use this place. You can see here the market formed this at this level, and you see market were trying to beat above it a little bit, but have to drop to the nearest red and did exactly that same thing. Then when the market spiked below the red, then you know this the next level that the market is going to, and the market got there. Now it's going to be helpful to you in anything. Now if you go to 5 minutes, you can also use it on 1 minute. Now the only issue with 1 minute is that I will have to screen it down. Okay, it does not yet come up on 1 minute, but it should come up very soon. But because of time, let me just go to 5 minutes. Now you can see on 5 minutes, let me zoom in a little bit. Okay, this is one you know. Okay, let's come to this level. Now this it, you can see on 5 minutes, the moment it touched the purple, The first spike does not touch the purple. The second spike almost touch it but does not. This touch it but does not goes beyond it. Then you can enter the market here. Set your stop loss here, because normally market supposed not to spike again and just anyhow. The market will pull back. Then when the market is pulling back, you know you're coming to the next key level here, which is this green, and the market goes to the green, you exit the market already. You are out of the market in profit. Now, if the market also gets to this yellow, to this green, up, which is actually the resistance where the market is coming back, you can see the market is somehow spiking at that level under the green. Possibly, if the market actually form under, let me just zoom out a little bit, you can see now we believe that the next thing that the market should do is to drop back to this level again, because it's at under, is now under the green. Now if you entered for spike under the green here, like if you have taken this small spike and you're not satisfied, you just protect your entry at that green. You protect your entry. Remember, once you get to the green, you're expecting a reaction. Now when you protect your entry, what will happen is that even if the market eventually did not now continue, you're not going to lose. You're already in profit because you enter at the right place. When you get to that green was when you make your entry. At the moment you make your entry, the spike occurs. Then the moment the spike occurs, you protect your entry immediately, expecting the market that it will continue dropping. Now if it does not continue dropping, you can manually close small profit by yourself, or you allow you to hit the stop loss that you have set by protecting your entry. Then you'll be out in maybe small profit or no profit, but not loss, compared to the way you've been doing before, that you've been blowing up your account. Now if the market beats above this level again and is going on top of this area, you will expect the market to first of all spike on that green. If it does not spike, it's not ready for you to just enter the market and expect it to continue. Remember, the market is beyond the green already before. So if the market goes above the green, you will expect the market to react to the green line. And if the market does not now react, it's not your own business. Remember, you are taking part of the profit in the market. You're not actually there to take everything. If you're trying to make sure that you don't miss everything, that's how you miss everything eventually, because you're going to lose massively and you're not going to be happy about it. So it will make sense you just make the right decision and just calm down, take your profit, enjoy your profit. Okay, if a spike occurs, you enjoy it, leave it. Now the reason why you might actually need to enter at the right point and not the wrong point if you know you want to go long is because of what I'm just explaining now. Now you can see that the spike occurs here, and there's tendency that the market is going to return up now and continue going up against spike. But let's assume you've entered since this point from around this area and the market have gotten here. Now from 25, market has gotten to 5.9 from this on 5 minutes. This 5.7521 to 7.44. That is almost 1,000 pips. Meaning on 0.2 you would have almost make $20, maybe around $18 or $16 already given to you already. I mean $18 or let's say $15 has been booked already, even though it's more than $15, but let's say $15. So you're having $20 account already, you have almost doubled the account within a day, and it's just because of the spike. Now does it mean it works only on crash 500? No, you can see crash 1000 also falling. Let's put our daily before shift on it. Okay, daily shift. Now you can see the same thing playing out. The green. Now the green line, you expect when the market gets to the green line, expect the market to drop, and exactly the market did. Protected your entry when this market spike. See, like I said, then it can continue for you. Now if it does not continue, you protected your entry, you'll be out again in small profit, and you would have booked your big profit here and that is exactly where market reached and went beyond. Now you can see the market has went beyond this point. Now if this market gets to this purple, now you can enter again for a sell, expecting the market to drop to where? Back to this green. It's just as simple as that. Does it mean that the market must drop? Might drop a little and not big, but higher chance that the market is going to drop and you're going to make money. Now go to boom 1000 also. Let's go to boom 1000. Let's pivot shift and drag. So always allow modification. See, now you can see now, according to this, now the market has actually spiked from here to here. According to 15 minutes, if you put it on 5 minutes, the same thing. The market has spiked to green. Now see, it spiked beyond the green. Now, like I was explaining before, if it is beyond the green, you're expecting the reaction. You don't just quickly say, okay, stay around the green, you join for say yeah, that is going to get to this green. There is possibility for you to lose for making that decision. But expect the market to first of all drop beyond the green very, very well, because the market have gone above. So you will expect it to come under again, then spike up to that green level, then you make your entry from the green level back to here or here, then you make profit. Now that, and I'll be wrapping it up with boom 500. The same thing with boom 500, just bring it, drag and drop, and just put it. Now if you look at it, the market also spiked from here to the green, to the red, went beyond the red, like I used to say. Now the moment you see the market beyond the red, you see another day, another spike like this, you make entry. Okay, this is 15 minutes. Let's take it to 5 minutes so that you can understand what I'm saying. Now you can see on 5 minutes the market actually spike continuously. Now when it spiked continuously, it went beyond the red. Let's assume you've been taking the spike, you've enjoying the spike. Now you can see it's moving away. It's going to be disappearing when it's not, it has actually served this purpose already. Now, but you can see that when we are looking at it, the market passed this level around where the thing forms before. Now this gave you the opportunity to wait for the market to return back. Now if you've not joined the market here to enjoy this spike, you wait for the market to return back with this one that we saw here when I started the video, when I just shifted to 5 minutes. Now you expect it to get here. You can see it got to that line, it spike again. When it spike again, you don't enjoy that spike possibly, or if you follow like the simple instruction, the moment the market is getting on top, that you just quickly enter for your buy, expecting the market to spike. Now does this mean that the spike will be very long? I'm not promising that it's going to be long, but I'm promising it's going to spike. Now a spike, then you protect your entry again, then this spike occur, the next spike occur, then see this place that you have another line, you book your profit again, you are out. Now if the market is showing something else, like on 5 minutes, on 15 minutes, now I just bring it back to 15 so that you can understand. That is the one we are talking about then. Now you enjoy that spike when the market touches, it touches before the market spike up, then you enjoy the spike. Now when you enjoy the spike up to this gray level, you are already out with your own profit. Now the market is coming back, like I explained. When the market is coming back, now it's getting to this, you've enjoyed this spike. Normally you should not enter again, normally, because you've taken that spike at that level before. But if you still enter at that level, all you just wait is to this level. When you see that the market did not spike up to this level, then you should know that it means you should exit the market. Now you exit the market, but you don't join quickly on itself, even though you can see this market running down and we have hope that the market is getting in, but there is higher chance that the market will first of all return back here to this red line, then drop. Now if you have rushed in because you feel like you were missing out when the whole of this finished, this one spiked, even though this actually spike, but it does not get here. So if you've taken the risk here, it's very risky. I did not even advise that normally. But let's say you've taken the risk. Okay, you can see this that actually spike was in agreement with this purple. Okay, so it's in agreement with the purple. So if you put it on 5 minutes, you would have seen that it actually spiked to a level, giving you opportunity to enter. Then when you make your entry from here, you're expecting the market to drop to the next level. Yeah, now this market is going to get here. It can spike a little bit on the way, but it's going to get here. Then after getting here, anything can also happen, or the market gets directly to this next level. Now it's just as simple as that. You taking the profit, you keep taking the profit, keep taking the profit. Now, am I saying that there will not be small losses? There can be few losses, but I'm telling you, they are what you was already anticipated for, and you are able to set your stop loss, take profit, knowing fully well you're going to enjoy it. And all you just need to do to get this is just to message me on Telegram. Subscribe and message me on Telegram. Recommend the video to people, and I will be very, very glad and happy to help you. All right. All right. That will be all for now. Bye for now.